morning. Welcome to IG's early morning call. It's Monday, the 27th of March. Let's take a look at the headlines as we await the start of today's European session in half an hour's time, where we're expecting some small gains at the beginning of today's session. The currency markets are trading pretty much where they were at the back end of last week after the market turmoil of last week, which was really generated by what was going on at Deutsche Bank particularly, but in the broader banking sector generally. There's a lot of debate in the markets this morning as to whether last week's panic around Deutsche Bank was justified. And of course, if it is justified, then people are going to be looking at other areas of the market in which to sell down. But are those that are more optimistic, perhaps maybe taking the view that maybe some of the downside has been overdone, given the fact these banks are so well capitalized now following the great financial crisis. In amongst the stock markets on the move overnight, Asia very much mixed. Hang Seng stock index has been one of the poorest performing areas of the market overnight because of the slump in Chinese industrial profits year on year. Take a look at volatility. We are down. There's a small gap actually in the candle body that we've got here. There's a crossover of wicks. We're currently trading at 23.23. There was this gap down to begin with. This is why it's a green candle here. So gap down to begin with, and then we've got a little bit of a progress at the moment. We're currently up 1/3 of 1%. On the start of today's session on the volatility markets. But I think broadly speaking, you can see actually here the way in which the MACD down the bottom here, this oscillator, has turned around. And as of Friday's trade, we saw that crossover. Now that is possibly going to be significant if we see the next few days, we see a trade below the 2250, which is what I've still got this line on here, which I think was the highs we had back on the 12th of January. And if we see that pick up on the downside, that means more money is going to go into risk assets. And as you can see at the moment, in fact, we've now got the FTSE now enjoying a really relatively substantial lift. Last week, we saw the markets gain overall in the week, and we're looking like we've got a good start to the trade on today's session. You can see it's bouncing off the 200-day moving average at 74.30, 74.79. Now, I'm not suggesting the downside has been completely offset now with these gains, but it is interesting to watch price action and where things are at the moment. After Friday's sell-off in Deutsche Bank and First Republic Bank, the banking sector certainly remains very much front and centre. I'll go into Deutsche Bank in some more detail in just a minute, but the German DAX, like the London markets, is now showing appreciable gains on from the close that we had on Friday. But of course, the big debate, as I was saying, is where this week's frailty will next emerge, if indeed it does somewhere. The problem is that all this is coming as central banks continue to threaten further interest rate rises. We got the German EFO out a little bit later on today, which might give us a little bit more of an idea as to the thinking around the European Central Bank. French markets doing brisk business on the upside as well, up 0.4%. Don't forget as well, it's also the month and quarter end this week ahead of most welcome Easter break, I'm sure, coming the following week. Let's look at what's been happening overnight in the Asia Pacific markets, just to give us this hint about what's happening. As I was saying, the Hang Seng stock index has been one of the underperforming in the markets today because of that Chinese industrial profits number, which I'll cover in just a moment. Nikkei 225 up. In fact, when all was said and done, in what was overall a mixed market in Australia, we were up 1/10 of 1% as at the close. Let's look at what's been happening on Wall Street as of Friday's close. We've seen these markets gain across the board. S&P 500, the best performer you can see there. We've been hearing some news overnight as well from the Federal Deposit Insurance Corporation, confirming this morning the news broken by Bloomberg over the weekend that First Citizens Bank will acquire Silicon Valley Bank's deposits and loans. Now, the Silicon Valley was all about what's happening in the tech sector. I want to show you the NASDAQ, which represents the tech sector. And you can see actually in the 24-hour markets, we closed at the highest point we've had on this market as at the close since August last year. And we're building on that today as well. Not quite as high as we were intraday back on the 22nd of March. I just want to show you back here to show you these levels here, August. That's when we were last at these sort of levels. And it certainly seems like the techs have been making up most of the lost ground that we've had. S&P 500, you can see relatively healthy gains as we've just seen on Friday compared to what happened on Thursday's session. And we've got a little doji star candle sitting all by itself, a gap up there at 39.92. Doji stars are interesting. Sometimes they represent the top of a move, but you won't know that until the next day's candle. And if it's a lower candle, then we're on the way down again. But you look at the MACD, it's increasingly there's an increasing distance between the red line, the red dotted line, and the blue line, which increases the size of the histogram boxes here. And if you get an increase on a green candle, in other words, on the upside, that means that more and more people are wanting to fight for a better price to get in long on these markets. But like I was saying on the European session, don't get your hopes too far up for too long, because I'm still convinced there's potentially more downside to go. Much of this is because of what's happening with central banks are desperate to try and conquer inflation, which they perceive as the bigger long-term threat, which they've got to get on top of. So I think European Central Bank interest rate decision next time, the Fed, the Bank of England, the Bank of Japan. Be interesting to see where all these central banks go, certainly those in the West. Now let's reverse back into this Chinese story, because in China overnight we've seen industrial profits. This is going to be a key feature to watch, because it was going to represent just how well and how successful China has emerged from the lockdowns. Industrial profits slumping 22.9% in the first 2 months of 2023 compared to the same period this time last year. Another indication, we think, that the market factory sector in the country is struggling to recover from the COVID related disruptions. This latest data adds to a list of economic indicators that show this is very much an uneven recovery in China. Factory output growth accelerating to 2.4% in January to February, retail sales swinging back to growth in the same period, but property investment is still on the decline despite government support. And this number here, 22.9% down between January and February for industrial profits. And I think that just underscores the imbalance of what we got in terms of recovery in China. Meanwhile, we got some interesting numbers out a little bit later on today. There's nothing big, I don't think, necessarily in terms of numbers. Perhaps maybe the German IFO might be the one to watch a little bit later on this morning. Starting at 9 o'clock this morning, the IFO report comes out. It's the business climate number we're watching, expected to fall marginally to 91 in March from 91.1 in February. It will be the first fall in 5 months if that comes to pass. Then looking ahead, on Wednesday, GfK consumer confidence for the month of April forecast to rise to a negative 29 in April after a negative 30.5 in the previous month. And on Thursday, the consumer price index in Germany for the month of March, the market expects CPI growth to deteriorate to 7.3% year on year from 8.7% in April. The harmonized CPI number, which is favored by the European Central Bank, is seen decelerating to 7.5% year on year. Now, if this comes to pass, this will then add further weight onto this argument that perhaps maybe the European Central Bank has done with big interest rate rises. Could the next one be 25 basis points? And then finally on Friday, retail sales in Germany expected to bounce back on a monthly basis, up 0.5% in March after a 0.3% drop in February. But the year-on-year figure is expected to come in at negative 5.6%. Now, let's take a look at what's happening on the foreign exchange markets ahead of that. This is the euro-dollar trade. We're currently trading on the way down for a third day in a row. You can see here for the euro against that stronger US dollar at 107.53. I want to switch this chart on to another area of the markets where we're looking at sterling. Recently, sterling has traded its highest point since the 2nd of February. Last couple of days, we've seen some softness, again creeping back in, 122.28. Today at 11 o'clock this morning, we've got the CBI Distributive Trade Survey. Last month, retail sales volumes are broadly unchanged following January's contraction. But at that report last time, it did warn that sales volumes are expected to fall again in the latest reading. And I think that's likely to come to pass. Retailers continue to be gloomy about their business situation over the next 3 months, but are less pessimistic than they were last quarter. Price growth remains near multi-decade highs, and retailers expect headcount to continue to be under pressure. But the fact that we've got the consumer finding it difficult to find extra money for discretionary items, particularly, I think it's unlikely that we're going to see a massive expansion in this number. Could we see further downside for sterling dollar? If you're short at 122.29, your stop goes up here just over the 123 level. If you're short sterling going into the US dollar, going to the CBI distributive trades number at 11 o'clock this morning. Let me just take a look at what's happening with some of the corporate news headlines. There's not much in terms that's likely to stir the markets, but I do want to quickly revisit what's been going on with Deutsche Bank, because this was obviously the big story last week. Let's take a look at the share price chart to remind ourselves as to where it all ended out last week. And in fact, the spike down that we had was the lowest trade we had since the 13th of October last year at Deutsche Bank. Now, I've got a 4.2% uplift on here. That's what's being penciled in at the start today. 4.2% under normal circumstances would be a nice healthy lift off at the start of today's trade, but it is only just half of the 8% that we saw lost on Friday. And it was this that triggered that Europe-wide banking sell-off. When looking at these numbers, you can see here on the chart for Deutsche Bank, just to remind ourselves that SocGen was down 6%, BNP Paribas down 5.3%, Barclays losing 4.2%. But the big question is this sell-off justified? Remind ourselves that Deutsche Bank posted profits the last 10 quarters. In Q4 2022, Deutsche Bank posted net profit of 1.8 billion euros, taking its annual net income to 5 billion in 2022. During the same period, Credit Suisse recorded the $7.3 billion loss. So there's a lot of question marks as to whether or not this downside has been overdone for Deutsche Bank. Let's look at the long-term chart. You can see clearly that these are the highs we had here back pre-Great Financial Crisis. Let me just bring up a line up there so I can show you where that is. There we go. That was 118 euros 51. Here we are now trading at 852.9. Deutsche Bank has strong solvency and liquidity positions. Its liquidity coverage ratio was 142% as at the end of 2022. Credit Suisse, on the other hand, has said to have had to use its liquidity buffers. So Deutsche Bank is in a very different state. And we know that all the major banks across Europe have had this stress testing and testing and testing and testing to make sure that the balance sheets can survive these sort of stresses. But we'll have to see how things develop this week and whether or not some of the doomsters can actually be kicked into the long grass. And perhaps maybe we can look at somewhat better times ahead going into the back end of the week. So, of course, now what's been happening as well on all this was the move in the foreign exchange markets. And it's seen money going back into the dollar. I've had a look at euro dollar. I've had a look at sterling dollar. This is 3 days of gains at the moment for the US dollar basket at 102.81. One other area of the market I've not shown you is what's happening with the dollar yen. Not much move on from the recent lows. A little bit of interest in dollar buying today. Broadly speaking, it's been a period where we've seen money going in to the Japanese yen. 131.21 is where we're trading there at the moment. Let's get back to some of the corporates, because there's been some breaking news out overnight. Back end of, Sunday, we heard some reports coming through on Bloomberg initially that Standard Chartered was looking at offloading its interest in Jordan Bank. And I think it's now been pretty much confirmed. The emerging markets focused lender presses ahead with plans to exit 7 markets in Africa and the Middle East. Now, I want to show you what's been happening overnight with Standard Chartered in the Hong Kong markets, because this stock is down, not quite as low as the low point that we saw back on the 20th of March. It's been supported by the 200-day moving average. We are down by a margin of 3.5%. Now, much of Hong Kong was down today because of that industrial profits number. And Standard Chartered, which has a lot of business, I think it's more than 50% of its overall revenues coming through from the Chinese type of markets, Taiwan, Hong Kong, Thailand, a lot of interest in what's happening out in that region. But it trades here in London, and this is where the most shares trade. On Friday, we saw a knock of 6.5%. Now, the big question for me is, do we see a recovery like we're seeing on Deutsche Bank today, or do we go down like we're doing in Hong Kong? It's a difficult one to call, but just watch it at the start. It'll open at 591.9. The bank, Standard Chartered, entered into an agreement with the Arab Jordan Investment Bank, subject to central bank approval, which will see Standard Chartered's corporate, commercial and institutional banking and consumer lending and private banking business migrated to Arab Jordan Investment Bank. There's no price on this deal that's been announced at the moment, but it certainly seems like it's part of a wider strategy for Standard Chartered. Let's stay on the charts. Just want to quickly catch up with a couple of other areas of the market I think worth looking at. Spot gold, little or no move. In fact, it's a red candle today. We're down at 1969. In the context of recent gains we've seen, just a little bit of a pullback there. Want to update you as well on what's been happening at the oil markets. Brent is trading at 75.32. We're mindful about what's been happening as well for US crude, which is up today just below the $70 barrel level. Last week, Baker Hughes' total rig count rose by 4 to 758, entirely due to the number of oil rigs in operation. up by 4 to 593. As we see, that effectively means there's more oil coming on to the market. Let me just clear up on a couple of other areas of the market worth watching. Do you remember we were talking about orange juice a couple of weeks ago with these record highs we had because of failure of harvests? There's all sorts of citrus fruit damage that's been done to crops because of the hurricane season. Hurricane Ian particularly wiped out a lot of orange juice crops in Florida. And there's also this citrus greening disease, which has hit a lot of crops as well, which means there's a long-term recovery issue going on here as well. We've got a big push-up back end of Friday, up by a margin of 3.5%. And another area of the market where we're seeing similar sort of gains, this is New York cocoa. And on Friday, intraday, we just passed the highs that we saw back on the 1st of March. And that took us to new levels not seen in 2 years for New York cocoa. Just wanted to highlight those two areas of the market to round us off on this Monday morning. We'll be back at 10:30 with charting the markets. Watch out at the start of today's trade for Standard Chartered at the beginning of the session today, and also that 4.2% recovery expected in the shares of Deutsche Bank. Could be an interesting week for banking stocks.